Hello friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about take solutions, whether it is a buy at these levels of 47, 48 or an avoid. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about Tech Solutions, a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions on a daily basis. Once you get the $10 membership, you will have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. Once you pay $100 for the year, you get 12 months membership. So actually you pay for 10 months and you get 12 months membership. So there's a clear 20% discount on whatever you are gaining once you pay upfront for 10 months. So kindly check that out. For detailed market or company talk, you can directly contact me and we can work things out with a fee. Also, if you cannot pay through a credit card or you don't have one, kindly do email me, and I'll be starting with something going forward in the next 2 to 3 months, inshallah, which would be with regard to some bank transfer. Now about the company, Take Solutions was established in 2000. They provide IT domain intensive services for life sciences and supply chain. They are into life sciences, R&D, BPO services. Uh, Also helps companies in various sectors in supply chain, information system, etc. Have offices in 9 countries across Asia, Europe, and South America. The market cap of the company is around 600 crores. If you look at the numbers, then the numbers are not that great, and this is the reason why the stock has been relentlessly falling. So sales have gone down by 67% to 216 crores. From a profit of 51 crores, the company has gone into losses of 25 crores. It's a zero debt company, yet they are really struggling on the bottom line as well as on the top line. Maybe more competition or stiff competition is eating into their sales. Free float has increased to 43.5% from 8%. That means that people who held it for a long time and strong managements who have held it or strong people who have held it as investors have sold into the stock. So that is a cause for concern. Return on equity of around 12.5%. There is no operating profit margin because the company is making losses. So this is the, you can say, the current scenario of the company. If you look at the performance, it has been a big underperformer in the last 2 years, relentlessly falling from the top, have declined 90% from the 2018 January high. So this is one stock that has not recovered, although the market has recovered. The mid and small caps have recovered from the lows of 2020 March, but from the highs of 2018 January, the stock has relentlessly fallen. So that has been a real cause for concern. It has been an underperformer. Results have not been great, so it has been inconsistent. So couple of quarters of good results, profit growth, then couple of quarters in which the company produces losses, and that has led to investors running away from such companies. Investors not quite choosing these companies compared to companies which are in the consumer domain. High interest cost is also a concern. So although the debt is extremely less, although it is more or less into IT and BPOs, etc., it shouldn't be having a lot of debt, yet there is high interest cost for the company, and business seems like it is being impacted, and that there are more competitors coming up which are eating into their business. This is what it seems like when you look at the numbers, and so competition is getting extremely stiff for Take Solutions, and it feels like this is a company that needs to perform really well for 4 or 5 quarters for people to get that probably inclination to buy the business again or buy the stock again. If you look at the technicals of the stock, have broken all strong support levels. The major last support level was around 60 to 58. It has broken that. Next solid support lies around 40. So 39.40 is where the support lies. Currently the stock is around 47 rupees. It has already gone below the 200 DMA of 49. So completely weak on the charts, extremely weak on the charts, and a major breakout is only expected when the stock crosses 60 on a closing basis. So you need to be extremely careful buying into this stock even for trading purposes. So what needs to be done? In my opinion, numbers have declined sharply and company has gone into losses. So these are two major reasons why I would completely avoid the stock, and buy only when it crosses 60. Even if the results are not out, if the stock is showing strength above 60, say it goes to 64, 65, then you start accumulating with a stop loss of 59. Otherwise, just do not get into this stock. So this was my video on Take Solutions. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. And kindly support me on Patreon. Thanks a lot for watching.